Picture this, you open your MyGov account or your accountant sends you through a business activity statement summary and there's a dollar amount you weren't expecting. Not few $100s, but 5 figures. And you have no idea where it came from. Because as far as you know, the business was doing fine, money was coming in, invoices were getting paid, and everything was supposed to be handled. If you run a small business in Australia, you are closer to this moment than you think. Right now, small businesses owe the ATO roughly 35.6 billion in unpaid tax debt, which is around 2/3 of all collectible debts in Australia, and the vast majority didn't see it coming. I'm Krishan Sharma from KNS Accountants, and I have recently sat with a client who had a good revenue and had been busy all year. But he was hit with $43,000 in ATO debt he didn't know it existed. I see this time and time again, but when we trace it back, the bill didn't even appear out of nowhere. In fact, they built up the bill themselves by spending money that wasn't theirs. In this video, I'll show you the 3 obligations most small business owners get wrong: GST, PAYG, and Super. So you can see whether you are already in trap. And I'll give you 3 things you can do before your next best quota to make sure that letter never arrives. You know you owe GST and PAYG withholding if you've got employees. You should know about Super. These are 3 separate obligations in 3 separate amounts. And right now, all 3 are sitting in your operating account, mixed in with your actual revenue. Most likely, you've even been paying wages from it, buying materials and covering your rent. But that's not a cash flow strategy you should rely on. And eventually it will run out. Let me show you what this cash flow approach looks like and why could you land yourself in hot water. Say you are turning over $500,000 a year. You look at your bank account on a Tuesday and see $80,000 sitting there. It feels healthy and safe, maybe even like you are ahead. But break that number down, and roughly $45,000 is GST you have collected on behalf of ATO. Another $12,000 is the PAYG withholding you have taken from your employees' wages. Super is in there too. Depending on your pay cycle, add it up, and somewhere between $35,000 and $40,000 of it, that $80,000 was never yours. But it doesn't feel that way. When a supplier invoice lands, or when you need to cover a quiet month, or when you are coding a job and you need materials upfront, it feels like cash flow. It feels like your money, and so you spend it like your money. Then business activity statement day arrives. Your accountant lodges the return and the ATO wants that $35,000 back because that was money you were supposed to have set aside. It was money you told yourself you'd sort out next month. The truth is, you didn't get a surprise bill. You spent the money that was never yours in the first place, and the ATO just asked for it back. Most owners assume the ATO sends a bill and you deal with it when it arrives. That's not how the system works. The moment your accountant lodges your BAS, the ATO knows exactly what you owe and the clock starts. Not when you open the letter or call your accountant, but the moment the lodgement hits their system and interest starts accruing from the due date. Your quiet month doesn't exist in their system. Neither does your plan to catch up next quarter. And to the ATO, the jobs you are waiting to get paid for doesn't help anything either. They see a number and a due date, that's it. And this is where most owners point the finger in the wrong direction. They think having an accountant means they are covered when they are not. Your accountant lodges the business activity statement and tells what you owe, but they are not managing your bank account on a Tuesday or stopping you from spending GST money on a supplier's invoice. They are not moving cash into a separate account every week either. That's your responsibility. And if you haven't been doing it, your accountant isn't the one who failed you. They are just the one who has to deliver the bad news. So if you are watching this and you're thinking you could use more advice like this, make sure you hit subscribe to get more helpful videos when they are posted. By the time you open that letter from ATO, you are not just behind, you are paying interest on money you already spent, and the compounding hasn't stopped. Every week you don't pay, the number grows. The ATO doesn't chase you with a call either, but they will chase you with the system. And by the time most owners realize how far behind they are not dealing with one bad quarter, but instead staring at 2 or 3 stacked on top of each other, plus interest, plus penalties. That's how a $35,000 obligation turns into $47,000 bill. Not because the ATO is being aggressive, but because you owed the money 6 months ago and the maths keep running. Now that you know what's happening and why, here's how to fix it. I want to be clear, this is not about working harder or earning more. This is a system problem and it has a system fix. The good news is you can sort this out before your next base quota. But all three of these needs to happen now, not at tax time. Step 1. Open a separate bank account this week. Nothing fancy, a free business saver will do. This is your tax obligation account. PAYG, GST, Super, every dollar that isn't yours goes in here. The moment it's sitting in a separate account, you can't accidentally spend it. That one step alone would prevent majority of the surprise bills I see in my practice. Step 2. Set up a weekly transfer, not monthly, not quarterly. Weekly. Every time an invoice gets paid, move a percentage into the tax account. For most small businesses, 25 to 30% is a safe starting point. But give us a call and we can give you a more precise number based on your margins. The point is, you separate the money the week you earn it, not the quota you owe it. If you wait until best day to move the cash across, it's already gone. Step 3. Ask your accountant one question this month, not at the tax time, this month. Based on my current lodgements, what do I owe the ATO right now? Not what you'll owe at the end of the financial year. What you owe right now. If they can give you that number in under 60 seconds, you've got a good accountant. If they can't, or if you don't know the answer, that's exactly the gap where the surprise bill lives. The owner who does these three things doesn't get that dreaded letter from the ATO. The one who keeps running everything through one bank account, telling themselves the cash flow will sort itself out next quarter. That's the owner I sat across the table from and is the one starting at $43,000 bill they didn't see coming. And by then, nobody can fix it because the money is already gone. Now, one of these three obligations I just walked you through is about to get significantly more dangerous. Starting 1st July 2026, the ATO is changing how Super works for small businesses. And the way most owners' accounting software handles Super right now is about to create a whole new version of problem. I have explained it all in this video, so make sure you check it out. See you in the next one.